Yo, welcome back to Dad Investor. Just wanted to go on a quick recap. July kind of sucked. We were up and then we were down. August was much better. And now we're at all-time highs. So yeah, today I wanted to go over July and August and kind of my whole strategy going forward. It's going to be a lot of good stuff. Really recommend you stay and watch the whole thing. Peace. Let's rewind to July. Here's my spreadsheet. You'll notice I was still profitable by about $700. Actually, it's $772. But the majority of the profit came from my dividend portfolio, the Dragon portfolio. But my active trading, not so great. I was doing heavy day trading, using short-term single leg options, basically buying a call or a put to kind of bet on which direction the market would make. But the results are pretty obvious. Inconsistent wins, mostly losing trades. Like you can see, a lot of these are single leg options, and they're all losses. Some of these, this is not even what I'm talking about. This isn't a day trade. This is like a long-term position. So the short-term stuff really didn't work. The data proved it. Day trading just doesn't work for me. However, then August happened, and it was a completely different story. I mean, look how beautiful that is. Look at that upward drift. This is the whole point of what I'm doing. I'm trying to build a income machine combined with dividends to then build a monster passive income portfolio, which is what the Dragon portfolio is. Dragon comes from dividend growth. Also, Dragon is awesome. It's part of my heritage. And it's a monster passive income machine. Dragon's guard gold. It kind of makes sense. Dragon portfolio, that's what we're building right now. We're building our hoard of gold that will produce gold forever. So yeah, here's my August spreadsheet. Profit jumped to over 2,600. That's including dividends. Without dividends, I believe it was about 1,500, something like that. Because I'm making about $1,000 in dividends every month. I'm not building my dividend positions very much right now. I am changing my idea to be more in line with the markets because the markets are booming. And I do want to kind of take advantage of that capital growth. So I am investing more in dividend growth stocks. And so it's going to be less dividends produced, but more long-term or medium-term capital gains. So yeah, the difference was I stopped using the daily lottery 0-day trades and started using a structured long-term option approach with leaps or just generally long-dated call options. The market tends to drift upwards, so as long as you take a long time horizon, you can get gains almost guaranteed. And you can, if things drop, you can just buy more and then you get even more out of it. So that's my approach right now. I'm very much taking a fundamental analysis approach to options because, so it works. It's reliable. It's what everyone should do is invest in the whole stock market or, the S&P 500, let's say. So I'm coupling that with options. The reason why is because, I'm also buying shares, but the reason I'm using options and primarily kind of focusing on that is because when you use options, you multiply your returns. And in the next clip, I have a great example of that. So here's my example. But before that, I wanted to show past 3 months, over $3,000. And what I wanted to show you is very recent. There's a couple things we could look at. So the wheel strategy is still working really well. So you have things like these expirations are all wheel strategy. So selling puts, selling covered calls, that jazz. But look at these amazing numbers, $100, $120. And look at the dates on these, 2026. I'm sorry, this is a wheel strategy, I think. This was multiple positions, but so the wheels is also awesome. But look at this. I don't care about Bitfarm bringing down. Okay, look at these. 391, 140, 150. I've never seen numbers like this since butterfly days, and I don't recommend using butterflies because I also lost this much too. So this is just incredible. These are leap options. So 2027. This is a long-dated option. I believe this doesn't qualify as a leap because right now we're in September of 2025, so this is less than a year. Leap options are basically long-dated options that are more than a year old, or more than a year before they expire. So I'm doing long-dated options in general because a lot of these don't have, because they're cheaper actually if you don't go that far out. So you can buy more of them. So for example, although because this is a cheap stock, AG, which I love and I do recommend, but this is not financial advice. I'm not an advisor. I'm just a dude figuring out what hedge funds do and trying to do it and then showing you what to do. So essentially I did 5 contracts. I cashed out 4 of them at this price, 29% gain. And then maybe I should have waited because I got a little bit later that same day, 54%, 148. But that shows you it multiplies how much money you can make off these stocks. You can't make this much money on a $10 stock buying and selling shares, especially the cost of buying these contracts is much lower. So let me show you a live example here. So we'll take one of my favorites. So remember I said the S&P 500 is always going up. I like calling this Spalug. It's probably not the best thing to call it, but look at what this is, S&P 500 from the Spiders. Which is the company that also makes SPY, SPY. So this is a baby SPY, and it's tiny comparatively, especially if you use the SPX. SPX is like thousands of dollars, whatever it is now, 6,000. SPY is like 600, and so is XSP. So those are like the smaller versions, but this is even smaller. Liquidity isn't perfect, but it's way better than other options I've found. I haven't had any problems getting in and out of the positions, adding to my positions. So yeah, I mean, you look at these positions, none of them are doing that great today because the market's down. What is today? Today is Wednesday, the 24th. So even though the market's down, my overall position here, for example, is up to $15, 9%, right? So the way this works, it's multiplied. So the market's down today, but what if it comes up? I mean, $2, whatever percentage, let's say 5%. Look how much money you're making. So if the market comes up a couple percentage points, you're making hundreds of dollars on every single position. How much does this position cost? $160. See the average cost here in the middle left of the screen. 1.60. That's $160 because you're using 100 shares. Each contract controls 100 shares. And so what that means is you pay $160 and you can not only make 20-30% return on your capital, you can make 200% return. And that's what people are doing. My coach, who I follow now, is basically teaching me a lot of this stuff and combining my interest in fundamental investing, fundamental analysis, long-term investing, and combining that with options. You can actually make short-term huge money because you're investing in smart things. So anyway, that is what I'm doing. That is what I'm loving. I have changed my profile, my trading profile, to match my investing profile, which is bullish on the market, long term, and in the short term, you want to cash out, you want to save your money, you want to put it in the market when the market's down, buy the dips, but do it this way using long dated options because you multiply your returns and diminish the costs. And then you can put money into actual underlyings like VOO, which is the market, so S&P 500, or SCHD, or gold, or real estate. So that's sort of my portfolio I'm building up here. Basically S&P 500, JEPQ, which is based on the QQQ, the NASDAQ, SHD, which is the Schwab dividend portfolio. Like if this is the only thing you own, you're probably good to go. But I am focusing a little bit more on VOO, Spalug, basically all the S&P 500s. SPY, I just have to see it, so I can easily access that. But VOO is really the one I'm actively investing in, and then everything else is just churning. So I do like Ulti, but I'm probably not going to invest much into it anymore unless it drops like 10+%. Misty I'm over and done with. Coney I'm over and done with. So I calculated both of these guys And they're both awesome in terms of I have been paid what I put in, so now it's all house money. So these are all bonuses now, even though they've dropped in value. They paid me more than I put in. So at this point, I'm just going to hold them forever and just take the money and run. So, yeah. I am not where I was earlier, where I was above or my all-time high. That was my Roth IRA, by the way, which I am building up little by little. But I haven't focused on it. I should focus on it. But yeah, we came down a little bit because the market came down. That's okay. My realized profit is still very high. And I'm excited. So now my main things are, I'm always doing 3 things, I guess. But I'm cutting out the VIX hedge because I don't really need it. That being said, you can still hedge on the VIX using leaps. Sorry, I went too far. See? So I bought this long-dated call option on the VIX. And sure, it costs a good amount of money, but you just hold it for like a long time, and then you can cash it out, or you can roll it forward, and then you're just always hedged. But I only need one thing to hedge the entire portfolio, and obviously I can buy more of this. So you can have multiple contracts. So that way I can hedge using the same strategy, the leap strategy. So my 3 strategies: dividends, always build up that dragon portfolio. Number 2, the wheel strategy, always beautiful, fun, short-term, but very hard to lose or almost impossible to lose. And then number 3, which is my main sort of active strategy, leaps. So I'll go more into it in the future if people are interested. And yeah, keep rolling. Peace out, y'all.